Good morning and welcome to another edition of Morgans Edward Street Weekly Wrap. I'm Matthew Gordon and today I thought I'd quickly run through the market based on technicals and a quick summary of the February reporting season. Firstly, looking at our index being the XJO, we've seen a phenomenal bounce of 15% from Christmas Eve in a quick period of just over 2 months. The largest contributors in that rise was the materials and the property trust sectors, which are both trading well above their October 2018 highs. Our resident technical analyst suggests the recent rally has unfolded in a 5-wave fashion. The current price action appears to be part of wave 5 and is approaching a band of resistance between 61.50 and 62.34, where initial selling pressure is likely to arise. The key indicators have reached overbought territory, suggesting in the short term, upside from here is likely to be limited and the index is vulnerable to a short-term pullback, and the initial downside target could be 5,900 points. Given this view, I personally continue to take a defensive position in the likes of Woolworths, Telstra and Sydney Airports. Now let's have a quick look at reporting season that's just eventuated in February. Despite continued evidence of economic headwinds being the housing slowdown and weak consumer sentiment, it was good to see no significant deterioration in earnings expectations. Although reporting season could be seen as uninspiring and probably not enough to move the market higher in line with our technical view, it was promising to see no significant deterioration in earnings overall. The notable key theme was the capital management initiatives, with some pretty healthy buybacks and special dividends being announced by the likes of BHP Rio, Wesfarmers Flight Centre and Brambles, as companies scramble to use up their franking balances prior to the next election. The standout sectors from where I sit were the materials and the tech space in reporting season. We witnessed some bumper earnings from Rio, Oz Minerals and Fortescue, with some healthy increased dividends to reward investors. In the tech sector, the likes of Altium, Appen and Afterpay reported very well, with solid outlooks ahead of them. Other notable standouts were the lottery player Jumbo Interactive and Webjet from the travel space. The sectors showing significant signs of weakness continues to be certain areas in retail, particularly within the car yard space with the likes of Apollo Tourism, Motorcycle Holdings, National Tyres, AP Eagers and even car sales, seeing the low end of the cycle due to the housing slowdown affecting some consumers' appetite for, buying new vehicles. Elsewhere, we saw some pretty poor results come in from Blackmores, and the regional banks as well, with Bendigo and Bank of Queensland, were pretty subdued, and two of our biggest healthcare stocks being CSL and Cochlear didn't really announce enough to move their share prices higher. Overall, a pretty even reporting season, with the misses very similar to the beats. From where I sit, a couple of stocks interested me worth a look for your portfolios. And the first one is Flight Centre. They announced a $3 special gross dividend and showed signs of strong growth in the corporate travel area. You can still buy Flight Centre up until the 21st of March and get that special dividend that I mentioned. Woolworths announced the sales of their service stations and will complete a buyback or special dividend most likely in April to the tune of $1.7 billion, which should help support their share price. Finally, InvoCare was a pretty weak result, but management reported that after a low flu season, we should see the number of deaths normalise, supporting earnings, which has helped their share price since reporting season and might be worth a look. That's it for me for another week. Don't forget to like our Morgans Edward Street Facebook page. Have a good weekend and we'll see you again next week. Bye for now.